Hello and welcome. You're tuned in to CNBC TV 18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Nigel D'Souza, and with me is Manisha Gupta. Manisha, well, we're all set for our daily dose of commodities, currencies, as well as cryptos. But what's on our radar today, Manisha?
Well, it clearly has to be the crude oil prices because we've seen the markets run up quite strongly. It wasn't the case in the New York session yesterday, but as Asia opened and as Europe opened as well, we did see a lot of movement coming in there. But we have a power-packed lineup on Big C today. The crude prices have spiked, and how? Currently, the prices are set for the largest single-day gain in about 5 years. We are seeing an impact across asset classes. After Israel conducted airstrikes on Iran, we have seen a huge run-up into the prices. Well, this actually is the biggest weekly gain that has been seen in case of crude oil prices since 2021 as well. We'll understand where crude is headed amid shifting power dynamics with Vandana Hari of Vanda Insights. Not just that, we'll also take a look at the gold, the dollar index with Peter McGuire. He's the CEO at trading.com. But before that, Nigel, tell us how the markets have been, because almost all asset classes have seen that.
Well, that's right. It's a bit of a risk-off that's playing out. But, if you look at the global equities, Wall Street, in fact, closed Thursday on the green. But, in fact, the futures are sharply lower because of the geopolitical tensions that have come back on the table. So stock futures are telling a completely different story from what we saw overnight. This after geopolitical tensions escalated overnight. The Dow futures have now slumped close to around 500 points or thereabouts. Remember, the producer price index for the month of May gained close to around 0.1%. Once again, that trading was cooler than what the street was working with, and that's what aided sentiment in the overnight trading session. That's why, in fact, you had all the three frontline indices overnight that ended in the green. Energy evidently was the top sectorial gainer on the S&P 500. It's up close to 4% in this week, and overall, looks like the Wall Street is on for solid gains this week, with the S&P 500 up close to around 0.8%, the Nasdaq as well up close to around 0.7%. The Dow is tracking a 0.5% gain. Looking ahead at next week, the street will be closely eyeing the University of Michigan Consumer Sentiment Report. That's due later today, so we'll keep an eye out on that particular data point with regard to the US markets. But stocks in Asia Pacific, well, they're tracking the weakness in the US futures. Yeah, the Japanese Nikkei that closed sharply lower by close to around 0.8%. The Chinese market, though, closed on similar levels, down close to around 0.7%. And back home on the Wall Street, the Nifty, though it's come off the morning lows, it's still trading with a sharp cut and continues to hover below that 25,000 odd mark. But Manisha, the sharp surge in crude oil prices, that's the big worry, both for the equity markets, for investor sentiment, though for commodity space, not so bad.
Oh, well, yes, for the bulls, not so bad, but we really have seen a huge movement come into this one. It's really been a swing trade, really, where you have seen the biggest global headline really coming in for this one. Well, we are tracking Israel has launched a series of preemptive airstrikes against Iran, targeting their key nuclear enrichment facility. The Israeli Defense Minister, Israel Katz, declared that the state of emergency shortly after those strikes happened. In fact, the reports are now suggesting that Iran's Revolutionary Guards, the commander Hossein Salami, has been killed in these strikes. Israeli defense officials have said they believe that the chief of Iran's military, Mohammad Bagheri, has also been eliminated in the opening strikes. Meanwhile, state-run media in Iran has reported multiple civilian fatalities in Tehran. Remember, this escalation follows just a day after U.S. President Donald Trump said that the country remains committed to resolving the Iran nuclear issue using diplomacy. However, following the attack earlier today, U.S. Secretary of State Mario Rubio has denied saying that the U.S. involvement in the airstrikes against Iran, adding that Israel said the action was necessary for its self-defense. He also warned that Iran should not target U.S. interests or personnel in the wake of these airstrikes. Here's Israeli Prime Minister Benjamin Netanyahu's recorded statement on the conducted airstrikes. Take a look.
Tonight, Israel backs those words with action. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program. We targeted Iran's main enrichment facility in Natanz. We targeted Iran's leading nuclear scientists working on the Iranian bomb. We also struck at the heart of Iran's ballistic missile program.
That, of course, is a recorded statement, but we've been hearing a lot of statements, a lot of tweets coming in as well on what really could conspire going forward in this weekend. We're now joined by Vandana Hardry of Vanda Insights. Vandana, I thank you so much for joining in. First of all, your reaction on this. Did you see this coming and the kind of reaction that we saw in crude oil prices at one point in time, up 12% in Asia?
Good afternoon, Manisha. So the tensions were indeed building up, and I think the peak before the attacks was the U.S. withdrawing non-essential personnel. I believe that happened on Wednesday, and crude did react to that as well, because that indicated a level of seriousness that the situation had gotten to. The strikes should not come as a surprise, because overall, we know Israel had been warning it would do that. One theory out there is that Israel has been unhappy with the US and Iran engaging in nuclear talks. And we know historically that has been Israel's position, that that any kind of engagement with Iran is actually not the right way to go. But I think now the big question for the oil market is not just what has happened, but what shape it takes in the next few hours, days, and weeks. Whether the situation will be successfully de-escalated. I think here what Donald Trump does and says in the coming hours is going to be very, very critical. Or whether it spirals downwards. My base case is that Trump will err on the side of trying to calm things down, in which case you could see crude surrender much of the risk premium that has crept in the last few hours.
Hi, Vandana. Good to have you on the show, and thanks a lot for joining in. Well, that's a valid point you make, right? The role of President Trump. The problem is, the sound bites that have come out of Israel till now, they indicate that they are in for a longer battle, which could be a cause of worry. Now, Iran is not a big supplier of crude in the markets. The problem is the Strait of Hormuz. If that is blocked, then that could cut off supply. What are you working with in terms of what is their next mode? Because yes, if they do close it, then in fact, it restricts supply, but it will be detrimental to their own economy as well. So how do you see things panning out?
Indeed. So when you see crude stacking on a lot of risk premium, and we see it, prices have pulled back in the past hour or so. But earlier this morning, Asia time, we saw Brent catapult well above $78 a barrel. I believe now it's around just below 73. What crude was pricing in was some of those worst case scenarios, one of them being Iran threatening to blockade, or was still actually blockading the Strait of Hormuz. There's also the Bab el-Mandeb Strait, which is another crucial choke point, which is within reach of the Houthi rebels in Yemen, which are aligned with Iran. And then there's a range of other potentially disastrous scenarios with regard to oil supply security, which is either deliberately or inadvertently, as Iran and Israel are exchanging fire. Maybe some of the oil facilities in the region and in the other major oil-producing countries in the Middle East get hit. Your very important question, what is the base case I'm working with right now, is that I don't expect Iran to deliberately target any other country than Israel. What we have seen again in the past few hours is that reportedly Iran launched about 100 drones towards Israel. Iran is going to be very, very careful. It needs friends in the region. It certainly cannot afford to make more enemies in the Arab world, the historical tensions aside. So it will target Israel directly. Now, what is the scope of the target, how long it continues, and whether this sort of devolves into a much bigger war between the two countries, or it's quickly contained. As I said earlier, I think let's wait and see the next few hours. I do feel that Trump will be very, very instrumental. He has cast himself as a peacemaker. He has been, quite frustratingly for him, unable to stop the Ukraine and Gaza wars as he had promised. I think the last thing he would need under his watch is a third war front to break out.
Oh, well, absolutely. Vandana, I would also want to talk about and dwell deeper into the crude prices reaction. I mean, we've seen a Russia-Ukraine continue for a third straight year, Israel-Gaza, Israel-Iran, if you may so, and then just tariff and so many other things, recession fears, of course, also adding up. We haven't seen crude oil prices really break a range, would you say? It hasn't gone to an 80 or a 90. It hasn't gone down below 60 as well, even with those recession fears and supply gut that we've spoken about as this year started. Would you say it's getting very stuck into a range now?
So this latest outbreak of tensions aside, you're quite right. For the past 5-6 weeks, it was very range bound. To your question, Manisha, why it has not slipped considerably or sustainably below $60, I believe, is that there is an underlying optimism, if you will, in the broader markets that this tariff war and that Trump's threats are basically beginning to, is just a way to negotiate better trade deals. And then he's not going to let the situation of, eye-watering import tariffs against countries remain for a long time. So we have seen a lot of that optimism, hope manifest already in the stock markets. I mean, if you just look at the US benchmark indices, S&P 500, Dow Jones, they're hovering close to their all-time highs. Just that optimism hasn't completely flowed through to oil. It has put a floor under Brent, but the reason it hasn't done more for crude is on the supply side. The Group of 8 OPEC plus members have erred on the side of bringing, accelerating the return of their barrels to the market. So that has sort of capped, whereas this, I think what is putting a floor is hope mingled with optimism that the worst of the tariff war or the impact of the worst of the tariff wars might be behind us.
Oh, well, absolutely. So that does give us three scenarios. One, it'll stagnate here and we wouldn't see anything happening. And as you said, perhaps the US would come in and try to de-escalate this. And the third is that it does escalate over the weekend. In all of these scenarios then, Vandana, what's your sense on what the crude prices could look like as early as in the next week and slightly longer term as well?
Yeah, I think so. First and foremost, the headlines that are going to move sentiment and prices are the upcoming developments on this Iran-Israel conflict. Very specifically, what we hear from Trump himself. I think that will determine whether traders want to stack on more bullish bets going into the weekend. That's always a big problem area because of markets don't trade, or whether they let things slide, as there is already some degree of fear premium in crude, and they just let it be to see how things unfold. Going into next week, I think it will really depend on where things stand. Have we already seen a de-escalation? Are we very close to it? If and when that happens, I expect prices to slide back considerably. I think the mid-60s for Brent is probably the equilibrium point, keeping in view everything that we know so far of the tariffs and the economic impact of the tariffs. I think the next step change probably we'll see close to to early July, which is when the deadline for the trade deals between the U.S. and all the trading partners except China comes around. And, then whether the economic momentum takes off from there or remains sort of middling around current levels, we'll see when that time comes around.
All right, Vandana, I think you said that if things cool off from here on, then maybe we see crude oil prices, settle back at the mid-60s odd. But, the problem is in a worst-case scenario, where do you see it headed? The last time around, I think there was this geopolitical tensions that came to the table. We had crude prices scale even the $100 per barrel mark. This time around, if you had to build in the most bullish or the worst feared from an India market perspective, where do you see crude oil prices move?
So I will make a distinction here in theory and what I think is more likely and the base case. In theory, there's really no cap. the worst case scenario, if you were to put that on the table, which is, close to 24, 25 million barrels per day of supply from the Middle East getting jeopardized, forget about actually getting stuck in the region. But even if there is a threat to substantial amounts of that supply, we could see spiraling into triple digits. That said, I think that is in theory. I think that is not the base case. The market will be working with because of the other sort of geopolitical factors that we've already discussed. I think Trump is going to be very keen to put an end to this. All the Middle Eastern powers are also going to throw their weight behind persuading both sides, Iran and Israel, to tamp things down and to take a diplomatic approach to that conflict. So the worst case scenario is, I wouldn't put a number to it. It can be quite terrible numbers, but I don't think that's the base case scenario. I do expect perhaps you could see a little more of risk premium creep in if things become worse before they get better between Israel and Iran. But I don't expect sort of triple-digit numbers as a result of this latest event.
I think, Vandana, what Nigel was pushing you for is if mid-60s is on the lower side, what is on the higher side, if not 3 digits?
Okay, on the higher side, I would say low 70s, and this is where I'm talking about midterm, Manisha. So let's assume that the market's optimism over the worst of the tariffs war being over turns out to be on the right track. And let's say US tariffs by and large settle somewhere between 10 and 20% on average against most countries. Definitely way higher than where they were in 2024, but way below the 60 to 150% or those kind of numbers that we saw under the reciprocal tariffs regime. We would settle it, it'll still be a drag on the global economy. And then I do expect OPEC Plus to continue accelerating the return of all the 2.2 million barrels per day of oil that it had kept from the market. So putting those two things together, I would say best case scenario is probably low 70s. My outlook for the second half of the year is an average for Brent somewhere in the high 60s.
Thanks a lot, Vandana, for joining in and giving us your insights into how do you see the crude market as well as crude oil prices shape up from here on. We look forward to chatting up with you rather soon. Well, time to slip into a short break, but on the other side, we'll be joined by Peter of Trading.com. He'll be joining in to give us his insights onto gold as well as the dollar index. Don't go anywhere.
Welcome back. And the Israel escalation on Iran did not just impact the equity markets or the crude. We've had a big impact coming in on the dollar index as well, which has seen a bit of a rebound from its 3-year lows there where it was trading yesterday. And then we also have seen a lot of safe haven buying come in for gold as well. Peter McGuire, CEO Trading.com, now joins us to decipher all of that. Peter, hi. To the dollar index first, and a smart rebound onto that one. While, of course, there are so many other factors into play, but just with the geopolitics, how do you look at gold and the kind of impact that it has had with the kind of price rise we've seen in dollar index?
Well, good afternoon, Manisha. I mean, I'm building on everything that, Vandana said, and these are unique times. You've seen gold take a big rally, up $50 to $60 in Asia trade today, given off a little bit, but it's certainly incredibly volatile. And when you're thinking of what it's achieved with US dollar index wrapped up in there, you've seen a bounce as far as US dollar in the last probably 6 or 7 hours. It was nearly through 98. I thought that we're going to see a high 97 sometime, during the day, and then all of a sudden it bounced, and it's bounced relatively strongly. So, yeah, gold's up, US dollar's up, and futures are down. That's where we're at the moment.
Hi, Peter. Good to see you in, as always. The Fed is going to have a role to play, and it appears with the spike in crude oil prices, it makes their job even more difficult. Now to say that the US president, as it is, has been putting pressure. What's your take? 80% of the street believes that you're going to see a cut in September, followed up by another cut in October. What do you believe?
Well, Nigel, I think you're on the money. I mean, where there's certainly, when you're thinking of what President Trump's coming out as far as his attacks on Fed Chair Powell, I mean, some of the commentary is just, it's comical, and it's certainly very deliberate. It's going to be fascinating. As you said, 80% by September, and I'm erring on that side unless he really hits him hard. He wants a 1% drop. But if oil prices stay at these sort of levels, and you guys are in the market, you understand it, it's going to drive inflation and quickly if you get oil, and if this is protracted, energy prices are going to drive inflation and then drive it strong. So this is the issue. If oil prices were to stay at 75 to 85, it's going to edge up inflation, and then that's going to be a handbrake to President Trump and his whole initiatives as far as getting a bigger rate cut. The second part is the pressure he's going to apply to Fed Chair Powell is going to be immense. We understand that the wolves are on the attack, and there's going to be everyone's focusing on the street. Scott Bessent taking the role. He is the daylight first. You know, there's Peter Walls there, but I really think that Scott Bessent will be the Fed chair. So they're all deck chairs are moving at the moment, and it's a very dynamic situation.
Peter, you talked about crude prices between 75 to 85. You were talking to Vandana Hari just a while back. She talked about 65 to 75. So what's your sense, one, for the crude oil price as a range for this year? Also with gold prices, where they are not too far away from its all-time highs, what are the kind of upper levels that you're anticipating in gold for the rest of this year?
Well, first off, if I answer the crude oil, Manisha, the thing that really worries me is if this is protracted. Let's just play that scenario out. What happens if the Houthis get involved and that side of it? So they create more turmoil in that Yemen region and then shipping into the Red Sea. So there's that. If the other thing is that that there is some form of slowing tanker traffic through the Strait of Hormuz and the Persian Gulf, then that's really going to impact crude prices. And I think that the US would take some sort of steps there to maintain that those waterways are open. We understand, the best part, 25-30% of all crude travels through there. So there's the outlier that really can change the dynamic as far as price. And that quite possibly that could happen if this is a protracted situation that goes over many weeks. The second part, as far as gold's going to take another leg up. It's at 34.50. I think at 3,500, certainly achievable this month. And my focus hasn't changed. Third quarter, it's going to be up, and fourth quarter, I think, 4,000 plus.
All right, 4,000 plus by the end of this year. Just coming back to crude yet again, Peter, and while Strait of Hormuz has been mentioned about many a times in history as well, but we really haven't ever seen it being shut, have we?
No, probably not. But I remember going back to 86, Manisha. I'm showing my age, and I probably shouldn't. The Strait of Hormuz went under massive pressure when the Bridgeton was hit, and that was a tanker that was reflagged. And this is what can happen. These tankers can be reflagged with US flag, and I'm just playing that scenario out. And then you could see some dramatic impacts as far as Iran taking a very adversarial role in what they're going to do with the Strait of Hormuz. I'm not saying that it's going to happen, but I'm saying if you get a war zone there, things can change and change significantly in the short term.
Peter, if I'd ask you for a level on crude oil prices, your bullish and bearish case, what would it be? What is the broad range you'll work with? For gold, we've got that out of the way. You're saying that $4,000 as well is very much possible. But on crude, what is your sense?
Nigel, if this escalates, this has got $90 written all over it. If it escalates, if things turn really dramatic, and we don't know what the future is, and this is war strategy. If Iran just sits back and it doesn't really retaliate, a few drones, if there was and that could be one scenario. The other scenario could be Houthis get involved, the whole thing becomes a powder keg, they fire into Israel, and the whole dynamic changes across the fabric of the Middle East, then, it's a $90 plus trade. If that doesn't happen, which we hope that is the case, well, then I think the added supply that you see from OPEC and OPEC Plus, you're going to drive it down under $60 a barrel. So that's where we're playing at the moment.
Well, there is so many ifs and buts. We do understand that, Peter, on where the crude prices could go. But because you follow Forex markets very, very closely as well, what is your sense now on dollar index? A 3-year lows one day, a smart rebound the other day. It's been holding below 100, though. Where do you see that going?
Well, Manisha, it's fallen in the last, 2 months from 110, maybe a little bit longer than that, 110, 109, down to 98. I think that you've got to look at the short end of the curve. You look at your 2 years and look at your 10 years. They're starting to come down. The 2 year, if that continues to go down and we see a rate cut and an aggressive rate cut from Fed Chair Powell, then no doubt we're going to see a 97 or 96 handle as far as that US dollar index. So I just want to see what happens over the next 3 months as far as Fed Chair Powell. One, if he's got a job, and secondly, if he takes some action. But the action that he takes is very dependent upon inflation, and that's dependent on the situation that we're talking about at the moment, Iran versus Israel.
Peter, as we wind down this conversation, one final question, and this one really is on the report that came in from ECB on how gold is 20% of forex reserves with most central banks now. US dollar is one, gold is second, and then, of course, you get Canadian dollar and Australian dollar and Japanese yen and various other currencies as well. The way gold seems to be moving in forex reserve and this whole conversation about de-dollarization, do you see those numbers really improve going forward?
Oh, yeah, I think there's so many moving parts to this because, one, naturally, the Fed situation, what happens as far as the safety of the US dollar. If it was going to be an escalation in tension, I think there will be a flight back to US dollar, Manisha. And where we roll in the short to medium term, gold up, precious metals up, and I would say, yeah, it's an unknown with dollar. I wouldn't be surprised if it's at 102 coming this time next week if there was an escalation in tensions there.
Peter McGuire, thank you so much for joining in today. I know it's a difficult day and a busy day as well because we've seen so much movement happen across asset classes there. And when you look at the gold prices, we've seen very strong gains. Crude oil prices, after inching 12% on the higher side, seem to be trading 5% on the higher side right now. So, well, yes, there is a bit of a pullback coming in from there. But thank you so much, Peter, for joining in and telling us that gold continues to be in a structural bull run. We could be looking at $3,500, $4,000 an ounce by the end of this year, while the dollar index could see a further decline, almost 97 to even 96. That would clearly be impacting and supporting various other asset classes. But that's all the time that we have on this show. With that, it's goodbye from me and Nigel until the next episode tomorrow of The Big C.